There are many retirement accounts that you can choose from nowadays, and it can be quite overwhelming. But is a Roth IRA the right choice for you? Well, stick around to the end of the video to find out. Hello everyone, this is Elijah with Financial Anatomy, and in this video we're going to be talking about what are the pros and cons of a Roth IRA retirement account. Many of y'all have probably heard this term thrown around from time to time, but may not actually know the pros and cons of what it can offer you, as well as overall what it is. Before we get into what a Roth IRA is, you should know that it is a type of IRA or individual retirement account. So if you haven't seen my What is a Traditional IRA video, you want to check that out first, because that goes over the fundamentals of what an IRA is in general, as well as things you can expect when it comes to an individual retirement account. There are different types like a SEP IRA, Roth IRA, traditional IRA, and you need to know the fundamentals of what the account is first. But if you've seen that video, you're in the right place if you're wondering what is a Roth IRA. So let's get into it. Since we'll be doing a lot of demonstrations on this video, we're actually going to go to the Financial Anatomy chalkboard, so I'll see you over there. Unlike some of the other IRAs, the actual amount that you are allowed to contribute to a Roth IRA is based on your income. To be eligible to contribute the maximum for 2020, which is $6,000 annually if you're under 50, $7,000 if over 50, your modified adjusted gross income must be less than $124,000 if you're single, or $196,000 if married and filing jointly. Contributions begin to be phased out above those amounts, and you can't put any money into a Roth IRA once your income reaches $139,000 if single, or $206,000 if married and filing jointly. For more details on this, visit the IRS website. What's interesting about a Roth IRA is that you pay taxes on any money you put in there now. This means if you put any assets like stocks, bonds, or index funds, just to name a few, if they appreciate in value, the gains are growing tax-free. On top of this, since you've already paid taxes on this money, you can withdraw the principal of the Roth IRA anytime with no penalties. Note that if you withdraw from the gains, you will be subject to paying a 10% penalty on that money unless it qualifies for a special distribution. Now that the base is formed, let's use an example. Here we have Beth, a 32-year-old school counselor that makes $50,000 a year. In this example, Beth is single. She decides to open up a Roth IRA with a brokerage and sets up her account to buy some index funds like the S&P 500, for instance. She puts in $6,000 in her account. She will have to pay taxes on this money now since it is not tax deductible. That money is split up and invested among the index funds she selected. Any gains that she gets from the funds are tax-free and can grow while she lives her life. When she retires at the age of 60, she starts withdrawing from the Roth IRA, profits and all. While oversimplified, this gives an overview of how Roth IRAs work. So, what are the pros of a Roth IRA? The biggest pro in a sense is that you pay taxes on this money now. That money can then grow for you tax-free if you hold investments in the account. That leads to another pro, which is you have full control over what you choose to put in the account, and since you've already paid taxes on the money, you can withdraw the principal of that money or sell assets that are equal to the value of that principal anytime without any penalties. Another pro is that there are no mandatory distributions for the owner of the IRA, unlike some of the other retirement accounts. Not a bad deal, right? Of course, there are cons, so what are the cons? Since you pay taxes now, you can't deduct any contributions you make to the account. Also, since you have control over what goes into the Roth IRA, it may be a con that investments are not chosen for you. The biggest con is that you can't make more money than the income limit we covered earlier if you want to keep making contributions to a Roth IRA. You can still add to the account if you do eventually go over this limit. You will need to do what is known as a backdoor Roth IRA, but that's another topic entirely. In summary, a Roth IRA is good for those that want full control of their investments and would like to pay taxes now so that their retirement can grow tax-free. And there you have it. You now have the pros and cons of what a Roth IRA is, as well as an overview of what it is in general. If you like this video, give it a thumbs up. It's much appreciated. And don't forget to subscribe if you're new, as well as subscribe to the Financial Anatomy newsletter, where you can get my free ebook, Still My Financial Blueprint, where I cover the aspects of budgeting and also which retirement accounts would be best for you given on your situation. I'll catch you in the next video. Don't forget to get out there and take control of your financial destiny.